Hello, welcome to this week's Your Money Matters, and we're going to wrap up a long-going series we've had over the last several weeks, Confessions of from a Financial Planner. We've talked about a lot of different things, and really kind of want to try to maybe sum things up here in the line of, what do you do now? Once I saw what was actually happening when people were following financial planning, what traditional retirement planning was actually doing to us, I did a ton of research and I began to embrace, I don't know, I guess you might call it a new dream. And that's to tell everyone who will listen the whole truth about how money really works. We don't understand it. I thought I understood it. I spent 20 years in the mortgage industry, and the first 12, 13 of them thought I understood money, but I didn't. It wasn't until the last 6, 7, 8 years that I really started to get a full grasp of it. And I don't want to sit here and tell you that I know everything about money, but I've learned a lot, and I've found that a lot of what we do, almost all of what we do with money, is not smart for us. It's smart for it's smarter for the powers that be. See, once you understand the truth about our economic system, there's no going back. You're not going to continue to make the mistakes that you've been making. I know that's what I've found. See, and I'm committed to helping people avoid I guess it's a rigged system, all the bad advice that really keeps us from being financially successful. We can and we must learn to bulletproof lifelong wealth in any economy, without Wall Street, without the big banks, without the government especially. And most people would rather do what everybody else is doing or do what they're told to do than to take the time to seek out or research and see if there's any alternative ways of thinking or of doing things. But not you. You're here. You've been watching these. Whether you've watched one or the whole series or not. Not you, because you're learning about it. So if you're, as I'm saying, if you're watching this, you're obviously an exception to that rule, and for that, I'd like to thank you. I want to thank you for watching this episode or however many episodes you've watched. Thanks for taking the time to explore a different way of thinking and doing things. And I got an important question for you. What are you going to do with this information? Are you using alternative economics principles and the strategies that we've talked about? Are you using them now? Whether they're intentionally using them or maybe you're using them but you didn't realize you were using them. In what ways can you align your finances more closely with what we've talked about, these alternative economic strategies? Perhaps it's time for you to investigate further. Perhaps it's time to take action on what you already know to be true. Whatever the case, I encourage you to not just watch this and then do nothing. Decide what the next steps are. Make some time. Trust me, the investment in time that you make will pay off immeasurably. And find out what you want to do and then do them, implement them. If you need some help, obviously there's help out there. As for what I'm doing, I'm not simply trying to build a business. I'm trying to, maybe build a movement, the alternative economics movement, if you will, that I sincerely hope will change the way that you and anyone else that's exposed to this look at your finances. Whether or not you decide to work with me or not, I hope that you'll take these things that we've talked about and use them for your advantage. Will you join the movement we're trying to start? Are you ready to practice alternative economics instead of following typical financial advice, which is, in my opinion, is designed to pull as much out of your pocket and put it into theirs? And I've got tons and tons of proof and data that backs that up. Can we help you build wealth without the big financial corporations on Wall Street or the roller coaster ride of the stock market? Well, contact us now if you're interested in doing this, and let's have a conversation. I'm not going to try to sell you anything. We can talk about how these types of strategies might work for what you want to do. When I've looked at these strategies and I've kind of morphed them into how I want to work, I've looked at what I would want out of my money, what I want out of my retirement, what I want. Very personal. But the things that we need to get there, I don't think are that unique, if that makes sense. So let's have a conversation. Let's see if these alternative economic strategies make sense for you. We'd love to see how we might be able to help you align your finances for lasting financial success, for lasting, well, you want to call it prosperity, if you will. There's no cost, there's no obligation for this conversation, okay? We're in the business of trying to educate people on looking at things differently. What happens through that process most of the time is, as we talk with people and we share with us, they develop a trust in us and they want us to help them. And that's a natural progression for that to happen. So that's where, by offering consultations, by offering conversations with no cost, no obligation, we're not doing a big sell here. People end up, we earn their trust, I guess you can put it. Doesn't happen overnight. It takes some time because what we're doing is so different than what you've been taught your entire life. And that makes perfect sense. And that's what we expect. We expect it to take a little bit of time, and we're happy to spend that time with you because we know that once you've decided that you want us to help you, you'll stay with us because the things we do, you never want to be without. As we go forward, I'm constantly going to be sharing more and more information. I do that through here with our Your Money Matters weekly video blog. We update our website a lot, quite often. I'm constantly posting things in social media. If you're not following me on LinkedIn, find me on LinkedIn or Facebook or even on Twitter. It's Your Safe. You are Safe Money Man. Your Safe Money Man. It's my handle on Twitter. Follow us there. We're sharing lots of great information, but most of the stuff you can find on the website or through the blog here. If you ever have any specific questions, call and ask, and let's talk about it. My main website's at maxmyretirementIncome.com. See, here's one of the things that we've found through all of this. Since what you want to do in retirement is an individual thing, all right, we can't help you. Well, we can help you a little bit on how to figure that out. We've got some tools that you can utilize to figure out what it is you want to do in retirement. But no matter what it is you want to do in retirement, we know that it's going to take not money per se, but an income, and it's a net spendable income. Income after taxes, income after fees, income after all of those things. Money that you cold hard cash that you'll have in your hand or in your bank account so you can access on your debit card, because we're getting away from cash, it seems. It's totally different what we're talking about. But what we've found is that retirement success is about building an income, not building assets. Okay. Traditional financial planning is all about building this big pile of assets that may or may not be in the best place for you to create that income. And folks, for 99% of us, where we're building that wealth is not in the most efficient, safest, best place, okay, for us to develop an income from it. We've touched on that a lot through this series. I'm constantly harping on that. I think the 401k, the 403b, the 457 plan, the IRA, those are the way they're structured through the fees that we pay to Wall Street, to the market losses, always having your money in the market, to the fact that we're deferring taxes on a little bit of money, hoping it'll grow into this big pile of money, right? Because that's what they're looking us to do, to pay taxes on that entire amount. Makes absolutely no sense to me, yet that's what they base. That's one of the main things they base this whole traditional financial planning on is, you got before tax dollars working for you, tax deferred, and you won't pay taxes until later on you be at a lower tax rate. Well, how are you going to be at a lower tax rate? We touched on this. There's only two ways. One is they lower tax rates. Do you think they're going to lower tax rates? If you do, folks, I'm going to have to disagree with you. The way the country's being run, I don't see there's any possible way we can reduce taxes. Of course, I don't know that for sure, but I'd rather plan for having higher taxes and have them be lower than to plan for lower taxes and have them be higher, wouldn't you? So, and the other way is that you make less money. Well, if you make less money, aren't you going to have to reduce your lifestyle? I know they say, well, you're not putting away for your retirement anymore, right? You shouldn't have a mortgage, right? Okay, makes sense. You're not putting money into Social Security. You're taking money out of Social. All right, that all makes perfect sense, and I understand where they're coming from on that. But when you sit down and look at it, first of all, you got inflation, so the cost of things keep going up. The house payment, all right? Did you know that a married couple age 65 today is expected out-of-pocket expenses throughout their lifetime of the life expectancy, which is 86.6 for male and 88.8 for female for 65-year-old? They're going to spend around $240,000 in out-of-pocket expenses just on health care. That does not include long-term care. I'm trying to fight off the sneeze here. I apologize. So if that's $240,000 over a 20-year period, 21, 23-year period, doesn't that sound a lot like a mortgage payment? It does to me. Okay, it's a similar amount of money going out. Okay, like you were paying on your house, and even though you don't have a mortgage payment, you still have taxes and insurance and maintenance. So it's not like your housing cost goes away. Then the other thing is, all right, so we're not taking money out of our paycheck for retirement. And that's true. But think about this. What day do you spend the most money on? Now, Saturday, right? For most of us, because we work Monday through Friday, have Saturday and Sunday off. Sunday, we don't spend as much money on Sunday. We got church and things going on. So imagine in retirement, okay, what are you going to have? You're going to have 7 Saturdays a week. So let's say you're putting $1,000, pulling $1,000 a month for your 401k, your FICA taxes, for Social Security, Medicare. All right. So how easy is it going to be to spend an extra $1,000 with 28 to 31 Saturdays a month? All right. So when they tell you that you're going to have less money or need less money, you're going to be able to live on less income. Honestly, I don't think you're going to unless you're ready to reduce your lifestyle. I mean, are you not going to do any travel? Are you not going to go see the grandkids? What are you going to do? Just sit and twiddle your thumbs, sit and read? Are you just going to, you live on the lake? Great. You're just going to go fish for 168 hours a week? Well, you're going to sleep for 40 of them, right? Or let's say you sleep for 60 of them. Still 108 hours. Think about it. And I don't think we really think about that until we get there. Also, here's another stat that came up. These are scary ones. Show the fastest growing divorce rates in retirement. What we're seeing is people weren't used to spending that much time together. So take some time now. We've got if you'll go to my website, maxmyretirementincome.com, at the top there's a link that's called Dreamcaster. Just click on that link for free. You can download a complimentary copy. It's our Dreamcaster worksheet where you fill out things that you enjoy, that you don't enjoy, and then it kind of gives you the basis to develop your plan for what you're going to do in retirement. Okay, if you're married, you do yours on your own, have your spouse do theirs on their own. Don't talk about it. Don't share answers until afterwards. Then compare and contrast. See what things you might be able to do together. See some things that maybe you love to play golf and she doesn't. Okay, so you guys go into retirement and deciding that, look, it's fine you want to play golf. You go play golf. You do your golf 3 times a week, however many times a week. And there's no guilt about being away from your spouse because your spouse, you guys decided going in that, hey, I'm going to do golf this many times a week, or they're going to do whatever they're interested in that maybe you're not. And you also may find some things that you didn't know each other were even interested in. You can go explore those things together in retirement. Maybe one of you wants to travel a lot. Maybe the other one doesn't. Those are things to know before you get into retirement, because not that there's ever a good time for a divorce, but the absolute worst time for divorce financially is in retirement when you've built all those assets. So, all right, well, I went longer than I thought I was going to, which if you follow me at all, I typically do, so I apologize for that. But hopefully you found some good information in here. So thanks for tuning in. We'll start a new theme. I'm going to try to do one next week. Got a lot going on, so I don't know if I'm going to get one out next week, but I'm going to certainly try to. If not, I apologize in advance. But if you find... if you like what you see here, share the link with your friends, family, anyone you care about, coworkers. We're just trying to help you do smarter things with your money. And I think if you'll spend some time looking at what we do, maybe you spend some time talking with us, that's probably the best way, because then we can address your situation specifically. I think you'll find that what we do is something that's very interesting and very beneficial to you. I get a lot of people ask when they find out all this, they go, why aren't more people doing this? Why isn't everybody doing it? And all I can say is everybody that understands it is doing it. So thanks for tuning in. Have a great week.